Precious metals have been spiking with silver up nearly a third year to date. So are a few junior resource company in a metals bull market. What's the plan? Shawn Khunkhun is CEO and director at Dolly Varden Silver with operations in Northwest BC. The company closed at $32 million financing in September. Shawn, welcome to Kitco.
Thanks for having me.
Tell us about Dolly Varden Silver. What are you focused on, Shawn?
Sure. So Dolly Varden is, it's got a rich history. We're up in the Golden Triangle. We're a past producing mine, very rich history, one of the richest silver mines on the planet, Canada's third largest silver mine. We're in the midst of a 32,000 meter drill program. We've been putting out some very good drill results. And as you mentioned, the $32 million financings got us well funded to continue.
Now, what are you modeling right now? I was lucky enough to go up and visit the site this summer as well, too. So I noticed that you had some targets there, and then you've also added the Homestake piece on as well, too.
Yeah, so, really, if I go back to the start of the year, there was three objectives. So we have gained a lot of understanding about the project because, number one, we've got the rich history. There's probably about 200,000 meters of drill data that we inherited. And then we've undertaken 135,000 meters of drilling since. So the idea going into the season where this is an advanced exploration project, I mentioned the past producing history. So the objective this year was threefold. Number one, could we continue to make new discoveries? So we've got a resource, we've got 64 million ounces of silver and 1 million ounces of gold. We wanted to demonstrate we understand the periodicity of the veins. And so we went up and we drilled at Moose and Chance, two deposits that are outside of the resource. And we had very successful results back in June. So one objective was showing that the land package can host new discoveries and we can efficiently find them. The second objective was the Wolf deposit. I believe it was Amanda Bennett, our project manager, who toured you when you were up at site. And Amanda is accredited for making a very significant discovery on the property, which was finding the mineralization at Wolf that persisted below the sediment cap. So the second objective this year was to go into Wolf, delineate a resource, and to show the size and expansion potential. And those results have exceeded my expectation. We've had multiple 20, 30 meter intercepts of better than half kilo silver grades. So we had the regional exploration, the Wolf, and then the third objective, you mentioned the acquired Homestake ground. We've got over 25 holes into Homestake and no assays have been reported. In the first half of 2024, the best gold intercept and the best silver intercept came out of Dolly Varden. So we're anxiously anticipating the 25 holes that we've got pending from Homestake.
Shawn, you mentioned the Golden Triangle to start. Why is this a significant area? There's a lot of development going on.
Listen, the Golden Triangle, to me, represents one of the top 5 mining areas on the planet Earth, which is a huge statement. But what I can back the statement up is the richest 20 kilometers. If I drew a circle around KSM Brucejack, it's actually the richest 20 kilometers for gold and silver mineralization on planet Earth. So I see this as a top 5 area. So it's located in Northwest BC. And it was an area for a long time that was tough to get to. It lacked infrastructure, glaciers and snow covered the area. It's not the most remote area on the planet today. However, there are infrastructure like roads, power, a deep water seaport. And because of that, what you've seen, if you look at the 130-year history of the Golden Triangle, in the first 100 years, there was 5 million ounces of gold discovered in the first century. The last 30 years, there's been an additional 150 million ounces of discovery. Now, why I think that's happening is because of the increased infrastructure. Now, in addition to the 155 million ounces of gold, there's been a lot of copper discovered. But what I'm interested in is the 1.2 billion ounces of silver. And for Dolly Varden, what intrigued me about the company before I took it over in February 2020 was Dolly had this 40 million ounce high grade resource. It was a past producer. I've studied the Golden Triangle for the last 20 years. And my take on the triangle is, if I look at the Premier deposit, if I look at SK Creek, if I look at Brucejack, like these are the success stories of the triangle. Premier was the richest mine in the era when it was producing in the 30s. SK Creek was one of the richest gold mines on planet Earth, discovered in 1989. Brucejack went into production in 2017, produces 300,000 ounces a year. Newmont, the world's largest publicly traded gold producers, producing there. My point here is they all started as silver deposits. So what investors sometimes don't fail to recognize is, in addition to the 3 million ounces of gold at SK Creek at 50 grams, there was about 160 million ounces of silver produced at over 2 kilos. So what intrigued me about Dolly was this idea that what starts as a silver mine in the Golden Triangle has developed into really large gold systems. So I don't doubt there's a lot of silver to discover, probably north of 100 million ounces at Dolly. But bringing in Homestake and bringing in the 1 million ounces of gold and having the big hits that we've had, the 25 meters of 46 grams of gold, the 12 meters of 80 grams of gold, I think we may be onto a system that's reminiscent of Brucejack, SK, or Premier, and that's what we've got on deck in terms of these drill results that are pending.
Macro question regarding precious metal prices, Shawn. So 2024, we've had gold that's been hitting several all-time highs. We've had silver, which following gold's supposed to, it's up a third to date, a year to date right now. Yeah. What do you think is driving precious metals right now?
It's interesting because I think what was driving precious metals was central bank buying. And, what we've seen an uptick in recently is ETF buying. So it's telling me that what was a phenomenon driven by Russia or China or other central banks out of the Western world is now coming here into generalist investors out of New York, out of London, and we're seeing that through the ETFs, and that's why we're seeing the shares catch a bid. So I think what's driving gold right now is the Fed easing, the 50 basis point cut. I think what's also driving gold is China stimulus. So, what I'm seeing right now for both gold and silver is an environment that tells me that these new all-time highs are going to be overshadowed with price action. It reminds me of, 2006 when gold broke 500 and went to $600, $700, $800. In that moment, 800 was the new high, but it was temporary, and we went on to see it trade up to 1900. So I can envision a future that's going to hold gold measured with a 3 handle, above $3,000. And what's really got me focused, and this is where I've put a lot of my own time and capital, is on the silver side. Because the silver setup is, you've got mine supply dwindling, you've got industrial use growing, and we're really running into a scenario by the end of 2025 where 100% of mine supply, we're producing about 850 million ounces a year, is going to be taken up by industry. Now, historically, 30% of demand for silver comes from the investment side of silver. And the big price spikes back in 1980, 2011, even some of the mini spikes in 2016 or 2020 were caused not by industry, but by investment demand. So what I see happening here is by the end of 2025, I would be shocked if we didn't get a new all-time high in silver. It's happened, every other time we've been into a precious bull market, silver has lagged and then outperformed. It looks like that setup is occurring right now, but both metals are up around 40% year to date. But what's really interesting is how the equities are outperforming the metal for the first time in the cycle.
So, Shawn, what are you hearing from investors right now? As you said, you've been studying the sector for decades. You have a background of business development. You have the background of finance as well, too. If we were having this conversation a year ago, we would have been navigating what was the Fed continuing to hike interest rates, pressure on precious metal prices. Yeah. So you've been a CEO that's been navigating that environment. When you hear from investors and when you're talking with other people in your board, how are you supposed to act as a junior resource company when we're in a bull market right now with precious metals?
That's a really good question because, we've seen, it's really interesting for me, from my perspective over 20 years, because the price really drives what the companies, how they're reacting to different projects. And what we saw, if we go back to 2000s, where we saw the price of gold go from sub 300 to 1900, in that you saw this overreaction. So companies really put on growth. They went for growth. They took on debt. They went for, marginal low grade deposits. And because we saw the price correct from 1900 down to under $1,100, it's been a time in the last decade where most market participants have been very conservative. They've been paying off debt, increasing dividends. The M&A activity up until really recently has been quiet. And so really we're an industry that has been navigating a bear market. And it's a really good question. What is the change in strategy as the market goes from bear to bull? And for me, I think that I've always had a focus on grade, because grade works in all environments. And but what I'm seeing is it's really going to be more about a defensive posture in terms of, now we're in an environment. And I'll give you this thought here. What I want you to appreciate about silver is sub $25 silver. Most silver projects are uneconomic. That's the sad truth. And it's the reason why so many companies in the silver space have gone out and acquired gold projects or base metal projects. And if you look at a lot of the big silver companies that we think of as silver companies, a lot of them only produce, 20% of their total metal makeup is actually silver. So up until May, it was not economic to be a silver miner, period. And so now we're in an environment where it pays to be in silver. And so what I think the right approach is to go out and to see what's coming, see what's on the horizon, which is much higher silver prices. And so what I've tried to do, and I started this journey back in 2018, and I've been executing the strategy for Dolly Varden shareholders, is grow through acquisitions, grow through drilling, be aggressive. And it's easy to say that when I've had the privilege to be able to access capital because we've got supportive shareholders. But if you don't have that access to capital, you can't execute that business. So for me, all the things that we did in the last 3 or 4 years are because of what we're seeing today in the metal prices. And it's the reason that 4 years ago, when I was being pressured to take Dolly back into production, I didn't do it because the price of silver was $16. And my thinking was, with everything on the horizon, the growing use of photovoltaics, the growing use of EVs, and silver's role in the green economy because of its durability, because of its chargeability, my thinking was, and I saw mine supply going like this, and I know silver is just a byproduct metal. Only 28% of it comes from pure mines. So the strategy is identify pure silver opportunities, look for size, look for grade, try to find those opportunities in safe jurisdictions. We've seen the world's largest silver producing country make it very, very difficult to advance projects, including banning open pit mining. So, my takeaway is, we've built Dolly for the market that we're in today and that we're going to continue to propel through. And I think we're seeing it in the Golden Triangle. And it's the reason a company like Skeena has gone from a $35 million valuation to $1 billion. The market is paying for safe jurisdiction metal. The market wants to know that you're mining this stuff in a safe way to the environment, socially, with good governance. We just had a mining expo down in Las Vegas that occurs once every 4 years. And the big tech CEOs came out and told the miners, if you don't mine this appropriately, if you're not adherent to environment, social, and governance, we're going to come in, because the sector's small and tech's big, and we're going to take 20% stakes in your companies, and we're going to take board representation, and we're going to mandate it ourselves. So I think we've always respected water, First Nations, We've always tried to focus on grade. I think we've actually done what a lot of companies are moving towards or evolving towards, and we're going to double down on that strategy.
What's it like mining in British Columbia right now? Is mining supported? We've just started a BC election right now. We've had the NDP, which is a left-wing leaning government that's been in charge for a couple of years now. So do you feel that BC is a good place to mine?
It's interesting. I was born and raised in BC, been in the mining industry for 20 years. I only started working in BC in the last 6 years. I stayed away from BC because I was told that BC is a tough place to operate from a permitting standpoint, from a First Nation standpoint, and with left-leaning NDP governments, to focus on Quebec or Ontario or other parts of the country. What led me into BC was Brucejack in 2017. And I saw how the government brought in the infrastructure. I saw how the First Nations settled land claim treaties and settlements in the late 90s. And for me, what's really interesting, under an NDP leadership that's gone on for a significant period of time, we've had mines permitted. We've had the biggest mining companies come into British Columbia. First it was Newcrest, then it was Newmont. And so it seems like there's a flood into BC from corporates all over the world. And, if you spend some time with the government and with the First Nations, and again, it's all regional. Permitting a mine 20 minutes outside of Vancouver may be different. But I think if we approach these things regionally and we approach these things and we ask the communities, in the case of the Golden Triangle, you've got the Tahltan, you've got the Nisga'a, you've got the local communities of Stewart, Terrace. They're screaming for jobs. They want to participate in this wealth creation exercise. And what I look back at history, and I look at what got communities through troubling times. So what got the North through the Great Depression? It was gold mining. And for me, as I saw some of these headwinds coming on the horizon, rising debt levels and all the uncertainty that comes along with it, inflation, the reason I focused my career on precious metals specifically, and to do them in a safe jurisdiction, is I thought that's what was going to get me and my family through an uncertain time, and we could preserve our purchasing power and potentially even prosper. In BC, it's very, very simple. The Blackwater project got permitted, and I can go on a list of others. That's been one of the more recent ones, but it's been a phenomenal place to operate, and it's really easy when you're dealing in the same time zone, the same language, the same currency. We can access these projects by land, by air, by sea. And I was just at a conference in Colorado, a couple of conferences, but at the first one at Beaver Creek, we put on a BC Regional Mining Alliance evening where we had representatives from the government, from the First Nations, participate with us to talk to investors about how open BC is for permitting, what the timelines are, what you need to do. So no, regardless of what happens with the election, mining is such an integral part of our economy. And again, it's on a case-by-case regional basis. It's a great place to operate. And I've operated in almost every territory and province and country. And I can say that my experience in BC is second to none.
Last year, you had the investment by Hecla to your group. I think that was a $10 million investment. The CEO at Hecla has since left Hecla. Just was wondering what your relationship with the company is right now.
It's a great question. So I worked really hard to build the relationships that we built with Hecla for the last 4.5 years. And there's a really interesting, colorful history between Hecla and Dolly Varden that involves court cases and hostile takeover attempts. And so I walked into a very, very interesting environment. And the approach I tried to take was, Hecla is a shareholder, and we respect that, and we want to work just as hard for Hecla as any other shareholder. And that approach and our science led to Hecla increasing their stake in the company by 50%. And I always think that regardless of who's leading the companies, the relationship is between Hecla and Dolly Varden, not Phil Baker and Shawn Khunkhun. Now, Phil and I built a friendship over that 4.5-year period, and he bought into my vision and he supported me. And without his support, the company would have never got off the ground. We went from a $20 million valuation to a $350 million valuation. And I put a lot of that recognition to the support of Hecla. But now we're in an environment where it's competitive. We've got gold component in Homestake. We've got silver making a move. And so regardless of who they decide to bring into Hecla to run Hecla, because they have an interim CEO right now, I'm confident that this project was a mine and will be a mine. So whether it's Hecla who partners with us or others, we're going to keep advancing the company. And we've also got relationships with their VPX, their VP Corporate Development. I recently met with their interim CEO down at the Denver Gold Forum. So we're in constant communication, constant contact. We had them up at site on August 6th. So the relationship is good. The relationship is strong. And, they own, I think, about 14% of the company today.
Lastly, Shawn, let's talk about the next 12 months for Dolly Varden as well. Where you're working the Golden Triangle, it does get a little bit of snow since it's up north, and then it's also in the mountains as well too. I do know that you do have some of your operations that are kind of closer, I guess, to the water as well. But again, talk about potential catalysts. Talk about what you see as a news flow over the next 12 months. So if I look back the last few years, we mainly ran our drill programs from approximately May to October. And so, and the reason for that is every day camps open, there's a cost. And so if we can efficiently run 24 hours a day, multiple shifts, and get the work we want done in a condensed period of time, we could save that money and that efficiency. So that's how we've operated. Now, by ending drilling in October, results continue to come out in October, in November, in December, in January, and even some years into February. And last year was a year where there was less snow than there has been in probably decades. So we were back up at site in February. So if you think about it from a catalyst standpoint, we've got news that we'll be putting out up until we're right back in the field and working again. So what I'd like to see over the next 12 months is, look, this is a very simple story. It's a company that's trying to increase its mineral inventory. When I took over, we had 40 million ounces in the ground. With silver at $16, the market was giving us 40 cents an ounce in the ground. So we had about a $16 million value. We added 100 million ounces of silver equivalent. The market's now valuing those ounces higher because the price of silver has doubled. So now we've got closer to $1 an ounce in the ground valuation, hence our new valuation. My goal is the same today as it was 4.5 years ago. Try to cost effectively, accretively increase that mineral inventory with high grade, high quality ounces. And so the goal is through discovery, so through exploration and through acquisition, let's get that ounce count up. And so it'll be focused on drilling, focused on organic growth. But two of the biggest moves the company's made has been in the M&A side. So buying Homestake was wildly accretive. It tripled the resource, bringing in the big bulk, the copper gold porphyry. So we're continuing to monitor regional opportunities for M&A for both, rising and falling stars in terms of companies that are gaining traction through discoveries and others that are falling on some hard times. And so we're building ourselves in a position with 40 million in the bank, no debt for a small exploration company. It's a good balance sheet. And most importantly, we have the shareholder base, as we just demonstrated by pulling off this $32 million financing. Money has never been raised at a higher level in Dolly Varden. Despite being in a bear market, we didn't do a down round of financing. So now we're well positioned as the market goes from bear to bull to we've got a head start
and we'll monitor these M&A opportunities, but continue focus on organic growth.
Shawn, thanks for your time.
Thanks for having me.
My name is Michael McRae. You're watching Kitco Mining.